Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, entrepreneurs. Today, I have the pleasure of going a second round with Shauna Wekherlien, a top 1% tax strategist in the U.S., who you may know better as the tax goddess. And I did give her a really great and long introduction for the first half. So I'm not going to repeat all that here because I just want to dive right into it. I know we have a lot of amazing things. We did talk about, if you missed the first half, we did talk about real estate professional status. And we also talked about her amazing book, The 6% Life. I believe that just came out in 2023. 7 strategies that successful entrepreneurs use to re-engineer their life to consistently pay less than 6% in taxes. So definitely you'll want to go and listen to that. We're going to talk a little bit more about that book and some more tax strategies. And we're also going to talk about it's kind of like her new old book, Starting Your Own Business, Do It Right from the Start, Lower Your Taxes, Protect Your Income, and Enjoy Your Life. I think the last part is probably the most important part because you better be enjoying your life. I mean, it's not just all about tax savings. I know I see in the first half, you mentioned you get some goosebumps from saving people money. And it's like, not only does that give me goosebumps to save money, but I just pounded the table and my video went out.
Your camera's just agreeing with us. It's all good. That's all good.
Exactly. It was a pound in agreement. All right. So yeah, some great strategies. Again, real estate's a great place to be for taxation, but again, you've got to know, you got to get the right CPA, you got to ask the right questions. And by the end of the year, it's a little too late if you haven't already 100%. Taken the time. I mean, how many people just sit down with their CPA and say like, okay, so now, like, what do we do? What's the game plan?
Right. And all that. And I mean, what kind of scares me a little, so here we are, right now we're kind of in the filing season for last year, right? And we get telephone calls left, right, and center. Okay, well, so what do we do? And the answer is, honey, like the year was over December 31st, right? You're for 2024, we got all sorts of options. Now there are some strategies. There's a very, very few. So just to give an idea, we look at a little over 1,500 strategies on every single client. Okay, right. It's a big number. Okay, now out of those 1,500, there's maybe 3 or 4 that can go backwards into a previous year. So it's really
like cost seg, for example.
Cost seg can go back, setting up a defined benefit or a cash balance plan, funding an IRA. A lot of people just kind of miss that you could fund an IRA or a non-deductible IRA. If you were still in January, I know we're a little bit past January, but if you were still in January, you might maybe be able to swing getting your kids on payroll. But at this point, you're talking about paying penalties and interest to do that. So really, guys, if you're thinking about planning, start now for this year. And you need to start making those changes now, because if you call me, and I will promise you this, if you call my team on December 26th, we will already have champagne and cookies in hand. We're done. I mean, there's just not a whole lot left that you can do. So,
right, that's one of the differences, I think, between a CPA, for example, and a tax strategist, because your CPA, in a lot of ways, and you said in the first half, is there to just keep you out of jail, right? But what you really need to do is that sort of prospective planning, and that's where somebody like you comes in strong.
It's one of the biggest complaints that we hear when people call us. I love my CPA. I've been with him 20 years. I've never had an audit. Like, don't want to leave the CPA service side.
Yeah, but how much money did you save?
Right, exactly. What and we're okay as strategists. We want your CPA to be involved in the process because they know all your history. They know all of the facts. They know all of these things, right? But the question is, has your CPA ever brought you something that will actually save you money? Well, yeah, they told me to buy a car and fund my 401k. Great. Those are absolutely valid strategies. What did they tell you the next year? Buy a new car and fund my 401k. I'm like, so how many cars do you want in your fleet before you get tired of that strategy, right? And that's really one of the biggest differences. It's our CPAs. I'm never angry at CPAs. They don't have the time right? I mean, could you imagine walking into your CPA's office and having a 3-hour sit down about strategy? No, they're so busy trying to get the returns done. They just don't
Fair
have the
enough, but
time
you're
to
not
do
paying
it.
them to do that, right?
We're
So
not 100%. Yep.
yeah, tax strategy does cost some money.
It does. It does. You know, one of the cool things that I love about tax strategy, and for example, our firm, it's 3 times ROI, right? We will look at the whole
Yes.
situation, right? And listen, these 10 strategies might work for you, but these 2, you're not going to get the ROI. So we can do them. We'll explain them to you. We'll tell you all about them, but you're not going to get that ROI that you're looking for. So this one, and this one, you will. Let's get on it. Let's do it.
So I'm glad you mentioned that, because it reminds me of my favorite Pablo Picasso joke. You might have heard it before. Lady sitting in an outdoor cafe in Paris, right? Picasso walks by. She recognizes him and asks, would you sketch my portrait? And, he does. And he says, here, that'll be 5,000 francs. And she's like, what? And she's like, it took you 5 minutes. And he says, Madame, you are mistaken. It took me my entire life. So whatever you pay a tax strategist, I mean, if you're getting you're talking at least 3 times ROI here.
Minimum.
Minimum,
Our
right.
average is 7.63 right now, minimum, right?
Yeah.
But yeah, if you're not getting 3 times, like, why would you bother? Because you do have to put in the work. You may have to pay some money for the strategy and for implementing the strategies, right? There's cost to doing it. So really, we start to see the benefit of tax strategy kicking in. How do I want to say this? You have little strategies for little businesses, right? If you're taking home less than about 100,000 a year, in our world, you're considered a little business. Okay.
Yeah.
If you're taking home between 100,000 and $1 million, you're a medium business. And if you're taking home more than $1 million, so there's different strategies for different levels, because a more than $1 million take home strategy may not work for the little guy just starting. Right. So.
Right. Yeah. And fair enough. You want to probably first question to ask is, like, who do you work with? Who are your clients? Am I a potential client for you? I mean, I know that you mentioned before what sort of clients you work with. I'll just let you say it. Like, what you throw out a number or a sort of like,
and I think really this, so I promise I'll answer. I think really for Tax Goddess is the distinguishment between, we try to give a ton of information, YouTube, TikTok, we write blog articles, right? We really try to give people the empowerment to be able to look it up or to ask questions or to reach out. We do, of course, have a newsletter, these kinds of things, right? Our minimum client, you need to be grossing at least $1 million a year. Otherwise, it just doesn't make any sense to work with us. Now, we have partners that deal with smaller businesses, that kind of thing. But yeah, if you want the top 3 in the country tax strategists, we want to make sure that we're implementing the biggest and best strategies for those people. So.
Yeah, you want to make sure it makes sense. So yeah, that's definitely the first question
Yeah.
to ask. Does it make sense for somebody with me with, X complexity with so much money coming in? Exactly. Does it make sense to work together? Are we going to pay that money? But I mean, I would say, and I'm just like naively, if I spend $1 and I get $7.63 back,
I'll take it all.
I think that sounds like that makes sense. But yeah, and you are very generous. I know you can learn a lot from your YouTube, your 2 books. So, maybe you're not grossing $1 million yet. Doesn't mean that the tax goddess can't help you, but you're just not yet a client.
Well, and I think one of the other things that people forget is that if you're headed that direction, or if you have a sale coming, because a lot of people, I mean, let me back up, a $500,000 a year gross business can sell for 1 or 2 or 3 times multiple of that. So if you have a sale, if you're buying a business, selling a business, that's also something to consider as far as when do you need advice? Because for many of us, it's just about day-to-day operations. How do I reduce my taxes right now? But if you know that you're buying your dad's business, or you're going to sell, you're the older one and you're going to sell to somebody, you better be doing some planning there too. So
yeah, exactly. And just like the legal professional, you don't wait to call until you're in the legal soup, right? Best time to call lawyers before you need one, right?
Ahead of time.
And same thing here. Don't call at the end of the year unless you're talking about this year.
Yeah. Yep. Well, and really, in order to do planning well, if I'm being very honest with you, in order to do planning well, if you haven't started by like September 1st, you're running out of landing strip, you need some time, because some of these strategies, absolutely you can do them immediately, right?
Implementation, record keeping.
All the things, right? You may have to go back all the way to January 1st to get all of that sorted. Okay, so yeah, if you're listening to this and it's anywhere near September 1st, if it's past September 1st, get on planning, right? Because otherwise you're looking at the next year. So
Great. Well, we talked about your scale of 0 to 10 in the previous segment. And, for those that are maybe on the aggressive end, so this is the aggression scale. So 0 to 10, where you're super aggressive, watch out. What about conservation easements? Now that's like real estate professional status. That's something that has been gone after. But like everything, there's a right way to do that. You can actually be a real estate professional, and it's put in the tax code for a reason. They're not out there just to harass people. And sorry, I even
we
said
don't
that.
think so. We don't believe so anyway. I don't know.
But conservation easement, that's something that's been abused. So can you tell us, like, why is that a good strategy, or why could it be a good strategy? And then when does it become a bad strategy because people are just doing it wrong?
Absolutely. Well, and this is one of the things that I love. Every single year, the IRS publishes something called their Dirty Dozen list. Okay. And I look at that Dirty Dozen list exactly the way you're saying it. Okay. Every single strategy on that list, there are good people and there are bad people. Okay. And so how do you know the difference? Because conservation easements are on there. Captive insurance is on there, right? Some very common, very powerful, very true and useful strategies are on that list. But if you're hooked up with the wrong guy, right? You got the bad boyfriend, not the good boyfriend, right? You can get into trouble. All right. So yeah, let's focus on conservation easements. So there are really in my mind, there are really two main categories of conservation easements. The first category, instead of tearing the building down, because it's a historic building, and building an 8-story mega tower that I would normally be allowed to do, but I can't because it's historic preservation. Okay. So conservation easements, these are very similar concepts here. I have the right to take a donation for the difference between what the fair market value would have been versus what it is now, because I've agreed not to build, right? I've agreed to keep it historic. When you physically own the piece of property, if you do it right, so get valuations, get the proper team, do all your proper documentation, right? Crossing those T's, dotting those I's, okay? As long as you do it right, you get the donation, the IRS has no problem with it, everybody's good. Where we've started to see abuse is these people, and it doesn't always happen, there's goods and bads, but when you're investing in a deal, okay? So instead of me buying a property myself, if I have, let's say, $100,000 and I want to invest in a syndication, okay? So I'm going to invest in a partnership that is buying a really big piece of property, okay? Now the IRS has put caps on the amount of return on investment that I am allowed to get for tax purposes from these conservation easements, okay? If I invest, the max cap is 2.5 times. Done, period. IRS set the limit. So if somebody's telling you they're going to get you a 7 times tax deduction, you run away, right? They are going above and beyond. Max cap is 2.5 times, period. So when we look at either you owning the property, so another good case, you own farmland. We had a client that owned 100 acres that backed up to a mountain preserve, okay? You are allowed to do a conservation easement on the back half of your property or whatever property you want to put into the easement and get that donation. When you own the property, as long as you do all the paperwork right, you're good, okay? If you're getting into an investment, you got to be really careful that because you're really relying on them doing everything properly. So who are they? How long have you known them? Where did you meet them? How long have they been doing this? How many times have they been audited, right? These are the types
do they offer audit support? That's another thing.
Well, and I always have a concern about that one, just from past experience. They may tell you they do, and they may not. So what I would ask for, if I was about to invest with somebody, show me the audit records of previous investments that you've done, and show me that you got an audit record back saying no change. Show me. Right? So I'm a little, if you couldn't tell, I'm a little skeptical. But I
if
think
you're not watching on the YouTube, I want to say she seems a little skeptical here.
The face, it's all on the face. Yeah, I think when you're dealing with that much money, right? For many people, $100,000 is a lot of money. It's a lot of money to me, right? I'm not just going to hand it over to somebody. I want to know why, where, when, how long have you been doing this? Show me the audit records. Like, I'm going to nitpick it, right? And when you, as an investor, as a taxpayer, look at your team, have your attorney come with you to that meeting. Have your CPA come with you to that meeting. Have them use their professional brains to nitpick every single angle you could possibly nitpick on this thing to make sure that you're getting into something that's above board and okay. So
I love it. As you get richer, you have to build a more professional team, more elements,
well, and listen,
more
even if you
complexity.
even if you're just starting, have a friend of yours that maybe is a good finance brain or an engineer brain, you know, somebody that's really good at numbers and math and that kind of thing. Take them with you to that meeting and tell them that their job is to practice ritualized dissent, right? Tell me all of the flaws in this plan that you see from your perspective, and let's ask the questions. Because if you don't get satisfactory answers, don't invest, go somewhere else. So
Yeah, that's good. That's good. Yeah. And getting the valuation too, as I understand, is huge. Because even if you're under the 2.5x, I mean, anybody can say something's worth whatever.
Yeah.
Like, for example, I'll try and use an anonymized example here. Somebody who they do, I think, mining on the property. And so they know what it's worth.
Yeah.
And maybe they're just, you know, like in your example, the back half or whatever. So they might do some mining operations, say, you know, we can show that it's worth this much, but, you know, we have so many acres that we're not doing operations on.
Yep. Well, and really that's the deal. And this is why you want the professional team. You know, one of the places where I see people get into a lot of trouble is that how do I want to say it? They're penny wise and pound foolish, right? They don't want to pay to have the valuation expert. They don't want to pay to have the attorney look at the contract. And when that happens, you are crossing into the unknown at your own risk, okay? Because without those professionals and all of their years of experience and all of the knowledge they bring, you could have paid the attorney $1,000, but now you're in a lawsuit for $100,000 to get your money back. So, and I want to be very careful here. Not every deal is bad. Okay. So for those listening to me, I know I've just seen a lot of bad things. Okay. But I have seen a lot of good things too. So I do think one of the things that is very useful for the listeners out there is if you're looking at getting invested in some of these things, talk to other people that you know that are in love with the investment, that have never had a problem, that have never had any problems, right? See if you can find those people. You know, thank goodness earlier you mentioned we are in an internet culture. We are. You will find out if somebody's angry at those people because it will be on the internet somewhere. So make sure you
Well, there's a lot of connections though to get that. So you may or may, it's hit or miss, but definitely you want to look. Good to talk to people who are well connected as well, because yeah, that scuttlebutt can be highly valuable. The deal you don't go into can be worth a lot more than the good ones that you do go into.
100%. Yeah.
All right. So how about let's hit some more real estate here. There's big difference in what you can do, generally speaking, with residential versus commercial real estate. I mean, obviously, commercial has got some advantages. So what are some of those advantages, and what are some things that you can do if you happen to be a residential real estate investor that's listening to the show?
I love it. Well, and it's so funny to me because to me, one of the primary advantages of being in commercial real estate rather than residential is there is no such thing as I have to go through tenant rights to kick somebody out. Okay. Now that has nothing to do with tax. It has all to do with operations, right? So definitely double check your state. For example, I'm in the state of Arizona. In Arizona, tenants, you have to give notice, you have to evict them, you have to go through this whole process like residential tenants. With commercial tenants, if you don't pay me my rent, I own everything in that building until you pay me rent. Yeah, the face. I love it, George, right? So George just made a smushy face for those not watching the YouTube here. But yeah, you know, it's actually very commercial landlord friendly versus the tenants. And that's going to be very specific in the state that you're in as to what kind of work do you need to do or not do. Now, of course,
now, when are you talking commercial here? You mean things like office and industrial?
Office, industrial, yeah, not big multiplex apartment complex, because that's still considered
Exactly, because a lot of my
residential from that
friends, we
standpoint.
consider 5 and up to be commercial. And in some ways it is, because we can use cost seg
Yeah.
and some other things like that. The banks consider us commercial.
Yeah.
Beyond 4, you're not going to be getting the same mortgage you got on your primary residence. But anyway, I just want to make sure everybody gets your distinction clearly.
Very good point. Yes, you're right. And I love the way that you bring that up, because every single department looks at it differently. So the Department of Housing, commercial or residential, could be different. The IRS, commercial or residential, could be different, right? The tax authorities, like property taxes, could be different. So yeah, definitely check your rules from that.
Well, here's another one, because the residential is good for multifamily because you get better depreciation from it. So
Yep.
we do get some benefit from that.
Yeah, the 27.5 versus 39 years. Yeah. Once you perform a cost segregation study, that benefit tends to diminish a little bit, really. Because you're right, 39 years, and there is still some property that's left at the 39 years. But once you do a cost, like normally it's not that much. So I will give it 39 versus 27.5. Yeah, what else from a tax perspective? Cost seg can be used on any of the above. No major deal. One of the things that a lot of people don't think about is reviewing your property taxes, right? So you can actually go to the states and argue that your property taxes should be lower. It is still a tax, right? So not many people know that you can file appeals. You can see if you can get it reduced, those kinds of things, something to watch out for. And yeah, really the only other thing in my mind is maybe the legal side setup. So do you need one LLC, multiple LLCs? Do you want a management LLC that's separate from your holding LLC? These kinds of pieces. So yeah.
All right, cool. I'm glad you talked about entities and structures, because I feel like we could do a whole show on your 6% tax solution. And I know I just mangled that title, the 6% life. It's about living the life. It's not just the tax solution. 6% life. That it's one of the things that really confuses new real estate investors is that, you really are running a business.
Oh, yes.
And you've got to be savvy. You got to understand, the sort of legal entity you're working with, tax structures, et cetera, et cetera. Okay, so let's get over to your other book. So again, this is your older book, but you're relaunching it. You got a second edition coming out, starting your own business, do it right from the start, protect your income, and enjoy your life. So what are some of the biggest mistakes you see these new entrepreneurs making?
Well, my instantaneous gut on the biggest mistake that people make is not having the right team. That's always question number one. You've got to collect the people around you, whether they're full-time, part-time, just one little consulting gig. You got to collect the people around you that are smarter than you in all of the different areas. Okay. 2, of course, legal protections, right? So make sure you're all set up, entity, bank accounts, EINs, LLCs, like whatever it is you need to do, your legal structuring. Okay. And then the third one, and really it should probably come first, is are you sure? Are you really, 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 really in your heart sure that you want to become an entrepreneur? Because for many people, they had a job, they hated their job, they hated their boss, whatever it was, right? And so they're like, okay, I'm going to go out on my own. They don't realize that being an entrepreneur means for the first 3 to 5 years, you're working more. You're working more hours. You have to figure it out. There is no one to rely on other than the team you put together, right?
Exactly. Chief Everything Officer, as my friend Charity Brown likes to say.
Chief Everything Officer, right? I remember the famous story that I have for myself is when I first went out on my own. I was the bad word, a W-2 for a very long time, okay? And when I first went out on my own, this was way back when, I'm dating myself, I understand. I didn't know how to change the paper in my fax machine, which means my business stopped and I was having a panic attack in the middle of an Office Max going, I don't even know where to physically change the paper in the fax machine, because when I had worked for somebody else, there was always an assistant or something to go figure that out, right? So are you really, 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 really sure, And what I would recommend to anyone out there is that when you look at the idea of starting a business, lay out what your expectations are, right? Because if you have this expectation, I'm going to make $150,000 a year in my first year, and I'm going to take all that home. remember, you have to buy a computer and buy software and buy the paper and buy the fax paper, like do all these things. Okay. So my starting point for any brand new entrepreneur, set out your expectations. What is it you want out of this? And are you sure you don't want to just go find a boss that you like and stick with your 40-hour-a-week job? Just saying.
I know I always feel with entrepreneurship, you can have as much freedom as you want if you're willing to work harder than you've ever worked in your life. And, I get to do cool things like I can hug my wife in the middle of the day. I get to interview Shauna Wekherlien. It's like it's 2 p.m. now, Eastern time. And then guess what? I'm going to be off this interview and I get to have lunch with my kids who just got home from school. So I get all of that. But, and I tell people I'm semi-retired, but then I stop myself, no, I am working harder than, just about any time in my W-2 career, except for when I was a bioscientist. I won't lie to you. That was constant work. And we really didn't get our time off. It's like, you can take the time off, it's on paper, but you're going to get fired if you take it. So I got to say, yes, it's definitely an easier life than that. But not easy. But I love that you have that book because, again, it is confusing. I started so many businesses. Every real estate entity, every purchase it's a special purpose entity or LLC. I guess we could just kind of
whatever type of entity.
One correlation basically for the small businesses is going to be an LLC. And that's huge. Okay, now I don't think that one of the things you mentioned though is the tax structures because. Okay, so you can say like, yes, we're going to do an LLC, we're going to do it right. But then there's at least a couple. There are a couple of popular, but there are many ways that you can tax that LLC. So tell us, how does that work and how does it generally work to your advantage?
Absolutely. And I will say that is a really big subject. So we may have to go to a third podcast here, but part 3 of taxation of structures. Yeah, depending on how you set it up, and this is why you want the team. In a perfect world, I know not everybody can afford it, but in a perfect world, you want the team to give you this advice before you start, okay? Because you can choose an LLC, most common. From a taxation perspective, an LLC can be taxed as a sole proprietorship, a partnership, an S Corp, a C Corp, right? So there's lots of options. And which one you want can depend on about 80 factors. How much money are you making? Are there any other partners in your partnership? What kind of rules do you want? What kind of flexibility do you want within your operating agreement for that entity? Do you want to be able to borrow money? Is this something you're building to sell way down the road? Okay. If you have real estate in that LLC, you may or may not want an S Corp or C Corp because you could run into what's called basis issues, which would take 3 hours to explain all on their own. Okay, so making the decision of which type of entity you really want is actually a very detailed discussion, and it plays into, well, what else do you already have? What other chess pieces do you already have on the board, right? Because if you already have an LLC and already have an S Corp, I don't know which one. It could very well depend. So,
yeah, love it. There's so many things you need to do. But what I also love about your book and about founding businesses in general is after a while you notice there's a pattern, right? There's certain things that you have to set up every time. And I think your book is great because it really serves as a sort of a checklist. Like, make sure you've done all these things, because otherwise then you're left scrambling.
Yep. Yeah. Well, and I think that's really, we tried in this particular book to really break it down into sections, right? So you can use it as one of those things where you need to, you can open the book and say, okay, today I'm focused on hiring staff. This is what I'm looking at. Today I'm focused on step 1. What kind of entity should I choose? So we do cover the different taxation types and all of those things in the book itself. So hopefully the new book will be ready, live, launched, coming up here in a month, I think, maybe a little later, but we are working on it. And
okay, yeah, we're recording at the end of let's just call it the beginning of March, because this will probably come out at the end of March.
So we'll probably be out.
So yeah, it might come out, just before the launch. Anyway, I know we got to let you go, and I'm glad you mentioned it first, because yes, you've been on the show before, you've done amazing things. Like, what did we not talk about already? We didn't talk about 100% bonus depreciation, some recent changes. I mean, that's gone away.
Bill's going to pass or not. Yeah.
I meant to say bonus depreciation. I'm thinking back to the good old days, bonus depreciation, and all these other things. So yeah, I think that definitely, I think a third will be in the offing. Now, usually I like to ask everybody 7 questions at the very end, but let's just pick one because I know you're full of tips. And one of the questions that I like to ask is, so what is one, I know you've already given us like a dozen, but what is one tip or trick that investors can implement in their business today?
Oh, I don't know why, but my gut is immediately going to do or do not. There is no try. Our
Oh, I
famous
love it. I just
master
said it to my
Yoda.
wife last night. She's not going to believe it. Okay. Actually, how about this? One bonus question. I just got to
Yeah.
say, I am writing a book right now, Passionate Living Through Passive Investing. And I can see that you are definitely all in the passionate living. And it's in the titles of your
Yes.
books as well, because it's not just about
Oh.
saving money, it's about also enjoying life. So I see all this exotic stuff behind you. Like, what is your secret for not just being, you know, you can see you're on the cover of Forbes and Entrepreneur in the background. If you're watching, you can see that. If you're listening, I'll describe it to you. But what is your secret for just getting out there and just loving life?
You know what? I have been lucky enough and I've worked hard enough to find the thing that I love to do, which is educate, teach, and help people. And so I wake up every single morning saying, I get to do what I love. So it's really hard not to be happy when you do what you love. So.
I love it. I love it. Okay, so then so that you can better educate and help and consult with people that need it. So email, website, carrier pigeon, smoke signals. What is the best way for our listeners to reach out to the tax goddess?
Oh, I love it. Well, I would totally say smoke signals, but I do wear glasses, so I don't know that I'd see them all, guys. It's awesome. Taxgoddess.com is the website. I've got a team of about 93 over here, so you probably won't be talking to me directly right off the bat, but I do be involved in the background. So be talking to our team, see if we are the right fit for you and you're the right fit for us. And if not, how can we get you to the right people to help you with what you need?
All right, wonderful. Well, thank you so much for taking the time to share your knowledge and experience with our audience today, Shauna.
Oh, thanks so much for having me. It was way too much fun as always.
Likewise.